When you're making plans to grow your wealth, you rarely go into your arsenal of precious metals to stockpile. However, recent global events, which are causing the prices of gold and silver to spike, is making me rethink that strategy. So, it's time to ask that age-old question, gold or silver? Which one should we be stacking in 2026? The Federal Reserve announced last Wednesday, December 10, 2025, that it will cut its overnight lending rates by 25 basis points, or a quarter percentage point. This will bring the targeted range to between 3.5% and 3.75%. There are also market analysts who became worried that the Fed would strike a hawkish tone, suggesting that it would be the central bank's last decrease in the near future. Both of these factors created an immediate but complex reaction in the precious metals market, setting the stage for 2026. Here's the breakdown of the potential impact on gold and silver, and let's look at it from a short, mid, and long-term perspective. First, there's the short-term catalyst, which was the recent Fed cut. The immediate reaction was bullish for both metals, as the lower interest rates reduced the opportunity cost of holding non-yielding assets such as gold and silver. There was an initial price jump. Spot gold rose to $4,271.30 per ounce on the day after the announcement. Spot silver extended its blistering rally, touching a new record high of $61.85 per ounce. Essentially, a rate cut diminishes the appeal of the US dollar and interest-bearing treasury bonds, moving investment capital towards precious metals. Now, let's discuss the midterm headwind. The more cautious guidance for 2026, the projection of only one additional rate cut, is the key complexity. This may be a signal that the Fed may pause its easing cycle early in 2026, preventing the metals from running too far, too fast. Some analysts are suggesting that gold may enter a period of consolidation or sideways movement in the early part of 2026, as traders wait for more data about inflation or employment to confirm the Fed's next move. If the US economy shows more resilience than expected, the hawkish outlook will strengthen, capping gold's gains. Despite the midterm caution, the underlying structural tailwinds that drove the 60% plus surge for both gold and silver in 2025 remain firmly in place for 2026. In summary, the Fed cut gives both metals a fresh push. The caution over the pace of future cuts suggests gold may take a breather in early 2026. However, silver's industrial story is so compelling that it may be able to ignore Fed caution and continue its incredible run, making it the most volatile and potentially highest gaining metal in 2026. It's easy to look at the financial numbers for both metals at face value, like what I'm doing right now, and make strong decisions either way. That 100% increase for silver is certainly very enticing. However, I'm not like most analysts. I simply do not believe that the factors which drove the price for gold and silver will still be in play in 2026. So let's look at the four key factors which will swing the pendulum for both metals in 2026. We will also assign a numerical value from 1 the lowest to 5 the highest for each factor, representing how each metal will perform with each of those factors in play. Let's begin. First is monetary policy. Overall, the trend is easing, meaning the rates are falling from their peak. As the dollar becomes less impactful, this makes gold a long-term favorite. We even have establishments such as Wells Fargo projecting that gold could reach $4,700 an ounce in 2026. Let's give this a rating of 3. Silver benefits from the same easing trend, but with more volatility compared to gold. And this volatility could go either way. So the smart play is to give this one a rating of 3 as well. When it comes to geopolitical uncertainty, on top of the usual global tensions and political instability, There will be a change of leadership in the Fed by the middle of 2026, and this reinforces the need for a safe haven for our hard-earned money. So let's give gold a rating of 3 here. Historically, periods of global instability have led to sharp increases in the prices of silver. Analysts are suggesting that simmering tensions could push prices above current projections for 2026. So, because of this, let's give silver a rating of 4 out of 5. The third factor is central bank demand. There will be non-stop buying. Central banks, particularly in China, are expected to continue to add gold to their reserves, providing a massive, inelastic demand floor for gold. We're giving gold a rating of 5 out of 5 here. For silver, when central bank buying is an extremely bullish factor for its sister metal gold, its direct and sustained impact on silver is not as dominant, but still positive. So let's give silver a rating of 3 here. Finally, we have industrial demand. Industrial demand is a relatively minor and stable component of the overall gold market, meaning it does not act as a primary driver of the price. We give gold a rating of 1 here. For silver, however, the potential may be through the roof next year. The global push for solar energy, electric vehicles, and AI data centers, where silver is crucial, will keep industrial demand soaring for silver, potentially creating persistent physical supply deficits and pushing prices much higher. Some analysts forecast silver to reach $70 an ounce in the first half of 2026. So we give silver a rating of 5 out of 5 here. So if we sum up all the factors, we see that both metals have a strong outlook for 2026. However, we see one of them having a distinct edge over the other. So, gold or silver in 2026? The answer, as with many things in investing, is not a simple either or. It really depends on your individual investment goals, tolerance risk, and general outlook on the market. The answer boils down to what your goals are and what budget you're working with heading into 2026. If you're looking for a bedrock, stable asset to preserve wealth and hedge against significant economic and geopolitical risks, gold is likely your primary choice. It's the ultimate safe haven, historically proven to perform well in uncertain times. If you're seeking higher growth potential, are comfortable with more volatility, and strongly believe in the future of technology and green energy, silver could be the more exciting play. Its industrial demand story is incredibly compelling. Many investors choose a diversified portfolio of both. A common approach is to have a larger allocation for gold for its stability, with a smaller but still significant allocation for silver for its growth potential. Consider the headlines that will dominate the news cycles in the next few years. Geopolitical events, inflation reports, central bank decisions, breakthroughs in renewable energy. All of these will affect the performance of gold and silver. Ultimately, gold and silver offer unique benefits and play distinct roles in a well-rounded portfolio. Do your own research on top of the facts that you learned from this video. Consider the macroeconomic environment leading to 2026 and make an informed decision which aligns with your financial strategy. So what are your thoughts? Are you stacking gold, silver, or both? Let me know in the comments below. Also, hit that like button, subscribe to this channel for more investment insights, and hit that notification bell so you don't miss our next video. Thanks for watching, and I'll see you in the next one.